2026 could be a volatile year across markets. Are you prepared for it? The old rules of global finance with easy money and seamless globalization have broken. In 2026, the environment demands control, discipline, and strategic nuance. I'm Jean-Baptiste Vautier, co-founder of the Vautier Family Office, board member of companies including Pershing Square and Howard Hughes Holdings, and I'm also a private investor. Today, I'm delivering my top 3 investment and finance predictions for 2026, focusing on the powerful shifts in rates, geopolitics, and institutional capital flow. First, how can private equity turn high rates into high return? Rates are stabilizing at a high level that we've seen in the past decade. What do these higher rates mean for businesses and investors going forward? How will they impact investment in the new year? Well, it simply means that we will have to work harder as investors to increase strategic value, to increase profitability, to increase optionality. And we can no longer count on either cheap money or permanently increasing multiple to make sure that we deliver a return. Is the world economy fracturing, or is it simply creating new protected investment opportunities? Well, geopolitical forces are the primary driver of investment. The shift towards a multipolar, resilient global structure will accelerate, creating new protected sectors across the US, Europe, and the UK. So what are the trends in geopolitics and cross-border investing that I believe will dominate 2026? Well, there will be a lot of friendshoring, strategic reallocation, supply chain resilience testing, and there will be further tension when it comes to trade. This will need to be factored into any investment strategy. Where are the global institutions placing their bets in 2026? The largest pools of capital, such as pension funds, endowments, and sovereign wealth funds, are adjusting their portfolios to thrive in the new financial landscape. They're favoring assets that provide resilience against inflation and geopolitical rise. This is becoming the new institutional playbook. Looking into 2026, investors will continue to place the bulk of their capital into a mix of AI, Max 7 plays, but as well as hedging against this and a very frothy valuation environment. Investor will probably try and reposition to garner more stability while maintaining the exposure to growth. It's going to be interesting to see that rebalancing play out in the first few months of 2026. True strategic insight means positioning your capital based on structural change and not cyclical hope. The shift in 2026 aren't obstacles. They're the roadmap to the year's greatest opportunities. As investor and business owners, your ability to navigate these complexities is your strategic advantage. Thank you for watching. If you found this discussion valuable, please give it a thumbs up and subscribe to the channel. If you have a topic you'd like me to discuss in a future video, please let me know in the comments below. Thank you again and see you next time.